All right. What's up, Tycoon? Super excited for today's video. We are going to go ahead and give a volatility index update. All right. This is the VIX, also known as the fear index. All right. But before we do that, all right, I want to go ahead and highlight something that I think is going to be really important for everyone. And I think that you should start to monitor and track this yourselves as well. Okay. Right now, if you go to cmegroup.com, okay, this is basically the countdown to the FOMC, and it gives you the target rate probabilities for the next Fed meeting. Okay, the current target rate is 225 to 250. All right, we have a 57% chance that we're going to get a 25 to 50 basis point hike. Okay, and currently we have a 42% chance we're going to get a 50 to 75 basis point hike. All right. Now, this fluctuates and changes daily and intraday, right? There were a couple moments today where this dropped down to 54, 52, and then we ended up closing the day back up here at 57. The reason that this is going to be really important to monitor, okay, is you can look at this and look at the VIX and tell you what market makers, right, and what economists and these analysts are really projecting, right? A lot of the crash, right, of this bear market was pricing in further rate hikes from the Fed. Okay, we have gotten most of those. We have gotten the very aggressive tightening policy, right? It just did 275 basis point hikes back to back, super aggressive. And we've seen the market start to really rally now because they think that the next cycle, okay, they are more dovish, 57% dovish and 42% hawkish. All right. So keep an eye on that while you also monitor the VIX. Okay. So we have a very nice bearish channel right here. Okay. And there's a couple key things that I really want to highlight. All right. So the first one being, we obviously have this very nice bearish channel up here, okay, indicated by these red lines right here, right? And these ovals, okay, these points that I have highlighted on the chart, I want you to realize that it's something, we're going to highlight basically some lower lows, all right? So here we have a low, and over here we have a lower low, right? Over here we have slightly lower, okay, but still a lower low, all right? Let's look at our RSI, right? Our RSI, we bottomed out here. And then at this point right here, we look at our RSI, it was higher, right? So we made a smaller, lower low right here, but we actually created a higher low, okay, on the RSI down here. This is what's known as bullish divergence, indicating that you may see a little pop on the VIX. Now, what does that happen? What happens when we get this bullish divergence? Let's zoom in and take a look. We see VIX close all the way down here, and then the next day it shoots up 5% in after hours, right? It does something known as gaps, okay? It creates these gaps on the chart, which I'm going to go ahead and show you. All right, if we look at today's price action, same thing is very similar happened, right? We come down here, all right? We close here yesterday, and then the VIX shoots up in the after hours, right? What that's done is created this gap down, all right? These gaps down, they fill 90 to 95% of the time historically, right? So what I'm looking for and what we got today was a rejection here, okay? Right around this resistance line, okay? We got that. We tried to break above, right? But our next candlestick opened here and closed below. And then the rest of the day here, here, and here, we got rejected very nicely at our price level, okay? So we're going to look for the VIX to drop down and fill this gap sometime soon, right? We would prefer sometime soon, but, the main question with these gaps is not if they're going to fill, but when they're going to fill, right? So in order for this gap down to fill, we would need market sentiment to remain bullish, right? And again, I want to emphasize something, the market is going to stay pretty bullish below this level, 20.5, right? Once we really are above 20.5, we're in much less of a neutral market and much more of a defensive market, right? That's when you're seeing that people are starting to buy hedges, right, on the S&P 500, maybe get some put contracts and things like that. But really, this week, we just had $1 trillion worth of contract expirations expire, okay? And if you don't think that's a big deal, it's a very, very big deal. And we also had about $45 billion in shorts have been covered, all right, here recently, right? There's been lots of short squeezes across the market. I've been covering lots of them. The main thing I want to highlight, okay, is I think that the next opportunity to go bullish in the market is going to be when we break this trend line, right? Here's the reason being, okay? We're going to go ahead and extend this a little bit to 90 days. And I want to show you guys why, all right? If we look on here, look at what we have continuously, right? We have this pattern here where the VIX, okay, is shooting straight up, all right, shooting straight up, but it's going down, okay? We can clearly see that we are in a downtrend, right? We already highlighted that, but look at these moments where the VIX is just having this sharp bullish divergence. When we break those lines, right? When we break those bullish divergence trend lines, that is when we see a nice push in the actual stock market, right? In the S&P 500 and the NASDAQ and such. All right. So that's what I'm going to be looking for. That's what I think you guys need to pay attention to as well. All right. Is going to be this bullish divergence on the VIX. And once we can break that, then that's when we're really going to see a dramatic drop in the VIX and possibly a nice increase in the S&P 500. Okay. Again, bullish divergence right here. All right. We break that trend line here on this day. Okay. So we can look here. This is right around when it got broken, right? We got rejected nicely at the middle of our bearish channel. Okay. Right here, this white dotted line. This is exactly halfway in this bearish channel. Got a nice rejection there. Broke that bullish divergence trend line and had a big puke, right? VIX puked massively that day. All right. And that was a very bullish day. Okay. And then come over here, right? We look and see we have, you know, this nice where VIX is starting to rise. It's starting to ride this bullish momentum right here. And it absolutely capitulates right here. All right. And we see the market go up huge. All right. The market goes up huge right here as VIX drops down very dramatically. Okay. So thank you all for watching. I do viewer requests every single week. So if you want to see a specific stock ticker analyzed, let me know in the comments below. Okay. That's all I need. I'll make the video as soon as I can. Okay. I do these videos again, the viewer requests every single week. So, you know, if you appreciated this, you know, analysis on the VIX, just let me know what stock you want me to analyze for you. And I'll give you, my own personal opinions on the chart, what levels I'm looking at, any divergences, gaps, things like that.